Will the Fed mess that up? Okay, so the Federal Reserve held short-term interest rates steady last week, but the central bank seems to be on track to raise rates at the next meeting in June. Some economists believe that we're going to see 2 more hikes this year. Some even say 3. We had an economist from Deutsche Bank earlier who said, oh no, total of 4, 3 more this year. What do you think?
I think we'll get 2 more this year.
That's what I think.
And that's what they've signaled. And I think the market is comfortable with that. More generally, the Fed is on this beautiful normalization path. It has done it very well so far. The Fed will not derail this economy. The Fed is very careful about this. I think that this economy actually has a lot of strength. We just have to make sure that we get help from overseas. And that's where you need good pro-growth policies in Europe. That's absolutely critical.
And we're waiting on the Bank of England. It is likely that they're going to hold interest rates unchanged in England. But how will they do that? How do you get Europe to grow the way the U.S. is?
So the most amazing thing about the Bank of England is a month ago, the market was pricing in a 90% probability of a hike, a near certainty. And that came down to 20% last week. Why? Because people realize that the growth context is changing in Europe. Europe has the ability to grow faster. They just need to implement pro-growth policies. And they can do that. They have the ability. It's a question as whether they have the political willingness.
Yeah, and the political will seems to be strong in the United States, that's for sure. The president is tweeting again this morning. Let me get this tweet out, because the president says this: I am pleased to inform you that Secretary of State Mike Pompeo is in the air and on his way back from North Korea with the 3 wonderful gentlemen that everyone is looking so forward to meeting. They seem to be in good health. Also, good meeting with Kim Jong-un. Date and place set. He goes on to say Secretary Pompeo and his guests will be landing at Andrews Air Force Base at 2 a.m. in the morning. I will be there to greet them. Very exciting. Wow, the president is going to go meet those 3 hostages. It's pretty incredible what's going on between the U.S. and North Korea, isn't it?
Yeah, and it shows you that a change in tactic at the right time can be what the technologists say disruptive. In a positive way. We tend to think disruptive politics is bad. It turns out that disruptive politics can actually get different outcomes.
He's made a lot of bold decisions, including the tax reform package. Mohamed, what has been the impact, in your view, of some of the policies coming out of this administration? And we can't underestimate the strength and the power of the rollback in regulations either.
Right. I think there's 3 elements to the pro-growth agenda, 2 of which have been implemented, and the third one that's important. Deregulation, which enables the private sector to do more, tax cuts that helps on the demand side, and the third thing that's really important and we must not forget is the infrastructure plan that the administration is working on and that hopefully Congress will adopt, because that brings in the private sector. You want to crowd in the private sector. There is a ton of cash on the sideline.
Yes, good point.
And if you can crowd that into productive activities, this economy gains even more traction.
And by the way, that infrastructure plan is a real job creator.
It is. It is absolutely. And it's really important.
Yeah, and those are high-paying jobs, too. Let me get your take on oil, because oil now $71 a barrel. On this idea that maybe we see, lower supplies in the global market with the Iranian oil gone. Your take, is that worrying you in terms of lowering the growth rates?
So first, this is a supply story, not a demand story. You've had actual reduction in output from Venezuela. You've had the Saudi and the Russian authorities continuing to cooperate to limit OPEC and non-OPEC supply. And now you have the expectation of lower supplies from Iran because of both direct sanction and then the secondary sanction. So this is a complete supply story, not a demand story. Now, there is a swing producer in the world, and that's shale oil. So I expect that you're going to see shale energy coming back on stream much faster than it has, and that's going to be the equalizing process. And I don't think higher oil prices are going to derail this economy.
Okay. And what about growth in the next couple of years? Because there is a narrative going around that people feel that this economy, while we'll see 2.7 or 3% growth this year, things slow down. Robert Kaplan, president of the Dallas Federal Reserve, which I've said a number of times on this program, told me recently he thinks we're going to get down to 1.75% growth by the end of 19. Do you think we're going to see a growth slowdown?
So I think that's a risk, not a baseline. Okay, we get down to that level if companies don't invest and if the rest of the world really slows down. We are capable of 2.5 to 3% growth, But let's continue on the policy side. And I will emphasize over and over again, infrastructure. Why? Because that promotes private investment. And that's critical for jobs, and it's critical for the well-being of the economy.
Right, because the president said that he wants a $1 or $1.5 trillion infrastructure package, but only $200 billion will be federal money. The rest will be private money.
And public-private partnerships.
Exactly.
There's a big scope for private-public partnerships. You know, again, if you look at it, there are distinct market failures. Okay, you have this bit of the value-added chain, this bit of the value-added chain, and there's a small part missing. And if you can complete the chain, you get a massive response. And I think that with that thinking of where is the market failure, how can we address it, you can get a lot more growth out of this economy.
Real quick on markets. What does that mean for markets? What do you tell clients today with this volatility coming back and a down market so far this year?
Yeah, I tell them, remember where you're coming from. Last year was amazing. Okay, if I had sat with you a year ago and said, Maria, we're going to get 20+ returns on the equity market. You're going to make money on bonds. And guess what? There's going to be no volatility. You're going to tell me, Mohamed, what are you talking? What have you been drinking this morning? Okay, but that's what we got last year. So there's a certain payback for last year, and that's why we've gone sideways for most of the year. But as we've gone sideways, we've priced in the return of normal volatility. And that's really important for the health of the economy.
Yeah, it is great to see you, Mohamed. Thanks so much.
Thank you for having me.
Great insights, as always, from you. Mohamed El-Erian joining us from Allianz.